Hey everyone, what's going on? Welcome to my YouTube channel. Make sure you subscribe and hit the bell icon so you're notified every Tuesday I release tax strategies for you guys. Today I'm going to be talking about bonus depreciation versus Section 179. This is especially important for year-end planning, and it's important for you to understand how bonus and Section 179 works. We also put timestamps below the video, so if you want to jump to any section, you come back. Check that out. We also have resources in the description, any resources that might help you to save money in taxes. Please, if you like the content, hit the like button, ask any questions that you have in the comment section, and we'll get to we'll be able to answer that. Okay, let's jump right into this. Okay, so one of the key things is that you have to understand the differences between bonus depreciation and Section 179. So when Tax Cuts and Jobs Act was passed in 2018, bonus depreciation, right, what you can take as the deduction on your property went up to 100%. So when you buy an asset, when I said property, I meant asset, right? When you buy an asset to be used in your business, that asset has a useful life, right? According to the IRS code, it could have either 5 years, 7 years, 10 years, or 15 years, depending what you're buying, right, of useful life. So IRS says purchase price divide by the number of years. Or instead of waiting to recoup your asset over the course of 5 or 7 years, there's something that's called bonus depreciation. You bought it for $100,000, you'll be able to deduct $100,000 as a bonus depreciation. Section 179 has the same idea, same concept, right? It's just a different type of depreciation rule or IRS tax code that also allows you to deduct 100%. Now, between Section 179 and bonus depreciation, there was a difference. Before the Tax Cuts and Jobs Act was passed, bonus depreciation, I believe it was 50%, right? But there was a limitation of how much you can take. And you should have, you could have come up with different strategies how to use both of them. But now we are in a very critical year before year end in 2022, because bonus depreciation 100% expires by the end of 2022, and it is now going to be 80%. So if you bought something for $100,000, you can only take 80%. So the way I'm going to structure this video, I'm going to go through this probably section, compare a little bit to Section 179, and then I'll jump to Section 179, okay? So bonus depreciation, if you're buying an asset, right, in 2023, you can only take 80% of it. In 2024, you can only take 60% of it. And like that, it's going to go down every year until it hits 20%. Now, could the tax law change? It could. Could there be some year-end extenders or anything of that sort? It could, but it also depends what administration we have in the office. Right now, it is set to expire from 100% to 80%. Another thing with bonus depreciation when it comes to planning is that you have to realize that if you're using bonus depreciation, you cannot pick and choose. For example, let's say you bought 2 assets that are depreciable over 7 years. That is one class of asset, right? So you cannot say, you know what, this equipment I'm going to depreciate over the course of 5 years, for example, but the other one I'm going to take 100%. No, the IRS says if you're going to use bonus depreciation on one class of asset, you have to use it on all classes of assets. Let me just change this, right? The IRS says you have to use it on all classes of assets. So there is really no leeway for you to plan and play around. Where else you can do that with Section 179, and we'll get to that. Now you might say, well, Boris, why would I want not, in what situations should I not depreciate everything under 100%? Few situations, right? Let's say, for example, you really buy a lot of assets for your business and equipment or whatever that may be. And you know that next year you're going to have an even better profitable year. So you don't want to take all of the depreciation deduction this year, right? You're like, hey, what if, I'm going to be in the higher brackets in the coming years. It would make sense maybe, right? It would make sense that not to take bonus depreciation right now. But you still wanted to take it on a portion or like one asset and not on the other asset. You can't do that with bonus. You have to jump to Section 179, and we'll talk about that. So that's really the downside of it. But again, if you're just buying one equipment, or you're not in the business of really buying a lot of equipment, a lot of assets, right, then you're good here, okay? There's no limits to profits, meaning to say if bonus depreciation can, when you take a lot of depreciation, a lot of assets, it could offset your income by a lot and create losses, right? And there is no limit. So it's not limited to your net profit, unlike Section 179, and we'll get to that. With Section 179, if it goes below zero, below your profit, it gets carried over. With bonus depreciation, there is no such limit. So it's really, really important. Excuse me. It is really, really important for you to plan for this accordingly, right? You've got to plan. Remember, I always say, first of all, if you have a profitable business, there's money to be saved on taxes. Planning is important. If you have a tax preparer, you do not have a tax planner. So make sure, right? Make sure that you're planning for this and figure out what is good for you. Now, another thing I want to add is that if you need to buy an equipment, you need to buy an equipment, right? You cannot sit and plan, right? But even after the year is over, this is something where you sit down with your tax advisor and you talk about, hey, maybe I can do bonus versus Section 179 or one versus another this year, depending what the profits look like, depending how much you want to carry over to the next year, because of how your profit is going to look like next year, right? So it's not just enough to know the differences. It's really you have to plan accordingly, right? So can you plan for this deduction after the year is over? If you still need to buy asset regardless, right? Yes, you can then play around and plan around. Excuse me. But if you're like, no, I'm not sure if I need to buy an asset this year. I'm gonna use the asset next year. I'm gonna need to buy it next year. That's when planning comes in. What should I do? How should I structure the sale? And what will I be able to deduct? Okay, and it's also unlimited deduction, right? It's not limited to the net profit of the business. So bonus depreciation, it can create losses in your business. As a matter of fact, we have a client who will have $1 million in profit, but we had a tax planning meeting call yesterday and we planned around it. Like, yes, we need to buy all of these assets, and the key is to put them in use, right? To put them in service before year end. So we're going to wipe out the entire $1 million with a bonus depreciation in Section 179, and we kind of talked about that and planned around that. So can bonus depreciation create losses for you? It absolutely can, okay? Now, one of the biggest advantages of the bonus depreciation is the fact that you can take 100% deduction of your car that is over 6,000 pounds, okay? Next year, you're not going to have that luxury, so to speak, because next year the deduction will only be 80%. So if you buy a car for $50,000, you can't take a $50,000 deduction anymore. In 2023, you can only take 40,000, right? 80% of that. The rest is going to be depreciated over the course of 5 years. You might say, well, Boris, I can jump to Section 179. So Section 179 has limits, and we're going to talk about that, okay? So if you need to, not saying to go ahead and do it, right? Big difference. If you need a vehicle for your business that you were already thinking that you're going to buy next year, if you're still going to say goodbye to that cash or still finance it, right? Then might as well do it right now. Because right now, if it's over 6,000 pounds, you can get 100% depreciation deduction, okay? Really, really important. So, and the best thing is that you don't have to pay cash for the vehicle to be able to take a deduction. You can finance, but again, only if you need it. Don't do it just as a tax strategy. If you don't need the vehicle, you're not saving money on taxes. Because you're paying more than what you're going to get a deduction for, right? And vehicles depreciate in value. So we don't want to invest in assets that we don't need and they depreciate in value. If you need it for the business to produce more income, that is a different story. And if you were thinking to buy the vehicle next year, might as well do it right now. Okay, let's jump over to Section 179 deduction. Now, Section 179, right, it has limits, okay? Now, it has limits, meaning to say that you cannot, like if you're going to buy assets and equipment in your business, you can only take 100% deduction up to $1,080,000. And this number is for 2022. It will be adjusted for inflation for 2023, but I'll just keep it as $1,080,000 here, okay? So it means if you're going to buy assets up to $1,080,000, you can deduct that, okay? Using Section 179. You might say, well, Boris, I have a bonus depreciation. Why would I want to do that? Remember, with bonus depreciation, you can only do it for one class of assets. With Section 179, it's any classes, right? So you can actually pick and choose as well. You bought $100,000 equipment, you can take Section 179, $20,000 now, $80,000 next year. Or if you have few machineries, one machinery can be expensed right away, another machinery can be expensed over the course of its useful life. So you have that flexibility, right? Like I said, what if you are thinking that next year you're going to be in a higher bracket, or this year in a higher bracket than next year, or vice versa, right? That's where the planning comes, and that's the flexibility of Section 179. Really, really important. The problem with the Section 179 is that it is limited to your profit. So for example, if you have $100,000 net profit in the business right now, and you want to plan around for your depreciation, and you got assets that are $500,000 worth, you probably do not want to do Section 179 if you want to take a big loss this year against your other income, because Section 179 will only hit the zero, up to zero. That's the floor. Anything that's left over will be carried forward to the future years, okay? So that's important. Can you offset the Section 179 losses against the W-2 income? You actually can, unlike a lot of people believe, but you can. It requires careful planning and really careful preparation. But overall, right, Section 179 is generally speaking limited to the net profit, okay? Bonus depreciation doesn't. It can create losses for you. Section 179 cannot create losses for you in the business. Now, I told you that it's limited to $1 million, excuse me, to $1,080,000. And there's a phase out of $2.5 million. So for example, if you bought an asset for $2.7 million, right? Because it's $200,000 over 2.5, that $200,000 will be deducted from $1,080,000, and that will be your first year 100% tax deduction. So again, this is already on a high level. If you have assets that you're purchasing, a lot of assets, definitely requires a lot of planning, okay? And auto limits. Like for example, if you buy a vehicle and you want to use Section 179, there is a limit of how much you can take a deduction as a 100% deduction, right? There is only a certain limit how much you can take the first year. Whereas with bonus depreciation, if the vehicle is over $6,000, you can take 100% of it. So the takeaway from this video is that as we are approaching year end, or anytime during the year, really, but most importantly year end, and you want to plan, right? Like I've got a few clients at a tax planning meeting with this year. We have tax planning meetings, especially year end meetings with all of our clients. And this was coming up. Boris, I'm going to have $1 million in profit. Like, which should I do, bonus or Section 179? Should I buy assets? And we were analyzing it. Do we need assets or we don't need assets? When will we place them in use? And what kind of assets, right? And this is really, really important for you to know that and make sure you plan for this with your tax advisor. Thank you so much for watching this video. Like I said, if you have liked this video, please like it. Let us know in the comments your questions. Subscribe and hit the bell icon. Every Tuesday I release a new tax strategy video. Till the next time.